Hello and welcome to the Global View on this Friday. I'm Andrew Gagan. Thanks for joining us again here at AusBiz. Let's take a look at the news out overnight. The United States and Iran have reached an agreement to extend their ceasefire and lift restrictions on shipping through the Strait of Hormuz. That's according to sources involved in the negotiations. However, President Trump has yet to approve the deal. An Iranian state media saying it has not been finalised. Well, signs of progress to end the Middle East conflict were enough to lift investor sentiment on Wall Street, with the S&P 500 and NASDAQ again closing at record highs. The Dow also hitting another record, although its gains were more muted. And data showing US inflation increasing at its fastest pace in 3 years last month failed to deter investors. Well, the AI trade resumed, led by Microsoft, on reports that it would release a new coding model next week. Dell shares rose about 4% in extended trade after it gave an outlook for annual sales of its service that power AI work that far surpassed analyst estimates. Meanwhile, AI company Anthropic has raised $65 billion in private funding that will push its valuation to around $965 billion, making it one of the world's most valuable startups as it heads towards an IPO. Marvel Technology, it rose after UBS raised its target price on the stock. Snowflake shares soaring after the data analytics firm lifted its annual product revenue forecast, announcing a 5-year AI infrastructure deal with Amazon Web Services, and peers Datadog and MongoDB also climbing. Healthcare stocks rose, led by Eli Lilly, after CVS Health said it would restore the drug maker's weight loss injections, a pound, to its coverage and add its newly approved obesity pill, Foundayo. Shares of Dollar Tree jumped higher after the discount retailer lifted its full-year profit forecast, while Best Buy shares also rallied after the electronics vendor forecast second quarter sales above estimates. And drone companies rose on reports that the Trump administration is in talks to fund drone firms. Shares of Unusual Machines, which is backed by the president's son Donald Jr., surged around 11%. Well, the US and Iran have reached an agreement on a memorandum of understanding to extend their ceasefire for 60 days and allow traffic to flow through the Strait of Hormuz. The agreement is expected to address Iran's stockpile of highly enriched uranium, but President Trump has yet to approve it. That's according to sources involved in the negotiations. And news of the possible agreement came after Iran and the United States exchanged fire in the Gulf. Meanwhile, in the US, inflation increased at its fastest pace in 3 years last month, driven by higher energy prices, with the Personal Consumption Expenditures Price Index jumping 3.8% in the 12 months through to April. Petrol prices in the US have risen more than 50% since the war started in late February. US Treasury yields have fallen in response to the reported agreement between the US and Iran. The 2-year Treasury yield at 4.02%, the 10-year was down to 4.45%. Australian 3-year government bond yields fell to 4.49%, the 10-year at 4.86%. The US dollar index down slightly on the day, the Aussie trading at 71.6 US cents. Oil prices are eased as traders considered conflicting reports of progress on a potential Middle East deal. Brent crude futures down around 1% to $93 a barrel. Gold has rebounded to be trading at around $4,495 an ounce. Copper futures rose more than 1%. Iron ore down slightly at 107 a tonne. And Bitcoin is trading at around $73,500 US dollars. So let's get across that news out of the Middle East and certainly what's going on Wall Street at the moment. Brad Gastwirth joining us from Circular Technology. Brad, welcome back to you. So potentially this is positive news with the US and Iran forming perhaps a 60-day extension of that ceasefire to hammer out some of these negotiations. And how would you describe the market reaction to that? Because, I mean, we've heard this sort of news before.
Yeah, I mean, it's never a dull moment here in the States. And you're absolutely right, Andrew. We're hearing this over and over again from the administration that, yes, we're so close to having a deal. But then, all of a sudden you see news reports of more bombings from our side or more bombings from Iran. So are we close to an MOU? Yes, it seems like they're close to extending a ceasefire. Will they get ultimately to a deal? I mean, it seems like there's pretty, hard lines on what the Trump administration wants and what Iran wants. And I mean, right now, Trump wants no nuclear weapons at all. And they want a completely free Strait of Hormuz. And, Iran wants the opposite. So let's see what actually happens. I mean, clearly the market likes, when there is some resolution and, oil prices will tick lower in the near term. But will this actually stick? I mean, that's the trillion-dollar question here.
Well, meanwhile, of course, despite this uncertainty, Wall Street continuing to hit record highs, largely driven by the AI trade. Interesting though, Brad, you say given that link with the Middle East, in particular, the effect the conflict is having in terms of energy and those prices moving higher, how does that impact particularly some of those AI infrastructure firms and the build out that are so energy intensive?
Yeah, I mean it's a great point there, Andrew. And I think a lot of people are, we had some comments early on during the U.S.-Iran war when it started, but it's quieted down a bit. But this should still be a major focus. I mean, energy prices are up significantly, and I think it's going to continue to go higher. And I mean we're going to see a little bit of a downtick here in oil. But I don't think it's going to, go down dramatically here. I think we're going to stay at elevated prices until there's really like a full resolution. Now, what does that mean for the infrastructure stocks? I mean, I think or the companies that are building out AI. I think prices go higher. They're still going to be spending a significant amount of money. But alternative energy sources like a Bloom Energy that has those portable module power plants, I mean, they're going to benefit, and they've been benefiting significantly. I mean, the next move is actually on the nuclear side with SMR, which is small modular reactors. And, they still need to get approved from governments, but there's certainly a tremendous amount of investments going on, especially from the cloud players.
So, Brad, you talk about particularly those AI infrastructure stocks. What are you seeing there at the moment? Because no signs that aggressive spending is slowing down.
Yeah, I mean, you're absolutely right, Andrew. Right now, I mean, it's an all, hands on deck, sprint to get to artificial super or artificial general intelligence. And these companies are going to spend significantly and continue to spend at these extraordinary levels until that's achieved. And I think you're going to continue to do so. And I think that, goes right into why Meta is looking at charging customers for some of its famous apps now. I mean, they're spending, close to 200 billion in capex, which is unheard of. But now they're looking for more ways to charge or to get more revenue, and being able to monetize that incredible install base is one way to generate significant revenue rather quickly. The big question there is, will that actually alienate their customers? Will they lose a lot of subs? I mean, that's really the big important question here.
Yeah, as to whether this is all paying off, given that vast amount of capex that continues to be spent. Meanwhile, of course, Brad, a number of key IPOs coming up. I mentioned Anthropic. That is looking huge, isn't it? And then, of course, so we've also got SpaceX and OpenAI. So there's a lot to look forward to, a lot of money going to be sloshing around the system.
Yeah, I mean, we got SpaceX coming soon, right? They're going to be the first out of that trillion-dollar private club that's going to be coming public. I mean, there's significant interest. And when we went through that S1, I mean, it basically talks about this company being an AI infrastructure play. I mean, clearly, SpaceX merged with xAI, so there's that xAI component. But they're looking to be more than just this, extraterrestrial space company. They want to be, an infrastructure, an AI global leader. And that's why I think they're trying to get this $2 trillion valuation. Now, I do see a significant amount of demand. Will there be a huge pop after this IPO when it does become public? I mean, that's something that I think everybody's watching. But yeah, I mean, you're absolutely right. After SpaceX, you got Anthropic, you got OpenAI, a couple of the largest private companies in history.
Just on SpaceX, so you're saying, Brad, that there's much more to it than just being a space company. This goes to the heart of what AI and defense.
Yeah, absolutely. I mean, especially when you go through that S1, which is the materials to go public. I mean, they really talk about how they want to be this AI infrastructure leader, how they want to be, more than just this, Starlink, giving, internet from satellites. They're gonna, their ambitions are pretty grand. But ultimately, I mean, next is really execution, right? I mean, there's one company and one person that's really, proved a lot of people wrong in the past, and that's Elon Musk. Now, will he be able to truly get to those, grand plans? I mean, it's remained to be seen, but, clearly it's somebody hard to bet against.
More broadly, Brad, what do you make of the so-called space trade, if you like, more than just SpaceX? So many companies coming to the party. seeing the potential there as they cash in on the new space race?
Yeah, I mean, I think, Andrew, I think that's a great question to bring up. I think you're going to see a lot of hype for the space stocks over the next several months or even quarters, especially in the near term here, the next 2 weeks going into SpaceX's IPO. But are all these created equal? Absolutely not. Now, if you look at some of these satellite companies, I think they will benefit. I think there's going to be many acquisitions. Again, when you have a private company that's generating, let's say it's the 10 billion a month, or or 10 billion a year from Starlink. I mean, these are big revenue numbers, but you're talking about $2 trillion valuation, which is unheard of for a new private company going public. They have a lot of capital that they could acquire many of these smaller satellite companies. So I do think you're going to continue to see a bit higher in satellite companies and derivatives of satellite companies and space companies to tick higher. And I think you'll see a lot more acquisitions actually in the next 12 to 24 months.
Great to get across those moves. Thanks for joining us from Circular Technology.
Thank you, Andrew.
Let's now turn our attention to the local market. Now, of course, we had a very negative session yesterday. In fact, the largest one-day fall since March. We're looking to make some of those losses up today. So S&P ASX 200 futures up 0.6%. I've spoken about that news out of the Middle East. Potentially a deal to extend that ceasefire by 60 days to allow negotiations to continue, particularly as far as Iran's uranium stockpile is concerned, and of course critically reopening the Strait of Hormuz. So we've been monitoring further developments out of the Middle East as the day progresses. Stay with us. The Open's up next.